This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Good morning and welcome back to Digital Perspectives. My goodness, what am I saying? I've changed the name of the show and I forgot. So welcome back to Digital Perspectives, everybody. It's our happiest day of the week. It's Friday. And I want to remind you before we get started, we have a brand new monthly newsletter that we'll be doing that will be coming out in 2 weeks. It will overlap from 2 weeks from the previous month and 2 weeks of the current month that we're in. Very excited for you guys to join that. There's going to be a lot of special deals in there for anybody that needs help with something that they would need anyway being in this space. So make sure you take a look at those. But definitely get on that rich list and find out all of the things that are happening current in this space. Now, let's not waste any more time because the reason we love Fridays is because of this guy right here. Dave, how you doing?
I'm doing great, Brad. I hope everybody's safe and happy out there. Exciting times ahead of us, and I'm always happy to join you on Friday. It's my favorite day of the week as well.
Yeah, it's a fun one, man. It really is. I just love it. So, my fault. I had an appointment, couldn't move it last week. The wife and I really had to hold up that appointment. So, we're here today. There's been a lot that's gone on, but before we get into that, I want to highlight something that is just really, really everybody should understand is that I think we're moving into a bull market. I think people can clearly see that. The OCC has come out and supported, the notion of digital custody or custody for digital assets. And Dave Cryptopolis called this bull market back on, was it June 29th, I believe?
June 29th, yeah.
Come on in. Talk about it, Dave. What were you seeing then that allowed you to understand that this has happened?
Well, number one is that, we've been in a bear market for a very long time. I just simply looked at the price action. I take 40 years of the experience that I have in the markets and applied it to the crypto market. And when I saw a couple of interesting things. At that June 29th low. Number one is it was kind of an inflection point. Could have gone lower, could have gone higher. It decided to go higher. I marked the bottom. In fact, I picked up some XRP at 17 cents at 7.171. And I said, you know what? I think that's the bottom. We're taking a look at this in the wrong way. Number one is the USCI, which is the commodity index that we mentioned some time ago, started bottoming. We saw the US dollar starting to drop sharply. And when you have a US dollar dropping sharply against a basket of the currencies it's measured against, and you have commodities starting to rise that have been in a bear market for 10 years, and you see the US dollar declining and you start to see some stabilization in the cryptocurrency market and a potential capitulation bottom on March 10th, it really, just based on the experience I have over 40 years of watching markets, 10 hours a day, I said, you know what, this is the bottom.
Wow, I got to tell you, and you nailed it. You absolutely nailed it, and it's exciting. So let's talk about this. Let's expand on this a little bit because there's been a lot of news that's come out, and I don't know if you've had a chance to speak about the OCC and your thoughts about that yet. You want to talk about that for a second?
Hey, that was just an absolutely incredible letter that Brian Brooks wrote. It was just and to remind everybody, the OCC doesn't need approval for Congress to have authoritative opinions on what banks should do. So this is going into the regs for the OCC on for banks. And, it really, to tell you the truth, it surprised me a little bit that it came out so quickly. He was just there, he was just transferred from Coinbase over to the OCC a few weeks ago. And boy, he hit the ground running and came out with this letter saying that banks now across the United States can custody crypto. And I just think it was incredible moment. And, I'm marking my calendar for that July 22nd date because I think it should be National Cryptocurrency Day.
I completely agree with you. It is. Oh, absolutely. I think that's exactly right. It is a watermark moment for this entire space. It's a historic moment being made. There's no question.
It absolutely is. It did a number of things all in one shot.
Yeah.
It legitimized cryptocurrencies. It gave banks the ability to enter this new decentralized fintech world.
Mm-hmm.
Okay, so it bridged that gap between the traditional banks and cryptocurrency world. And it also gave the green light to banks to not only custody, but also potentially offer trading services and all kinds of other services in this new fintech world. So it did a lot of things in there. And it also gave a tremendous amount of confidence to investors.
Yeah.
I mean, that was, and we kind of saw the effect, I think, over the last week or so in the cryptocurrency market. There's been, ups and downs, but the downs have been very, very stable. They haven't really been sharp sell-offs or anything like that. And there's been a nice steady rise. And I think it shows that, hey, if you were skittish about entering the cryptocurrency market before, after this news came out, after this letter came out, you should have at least some confidence in the market that the OCC is behind cryptocurrencies at this point and legitimizes the space.
Yeah, 100%. It is so exciting. And, the other thing I think of, too, is that we've talked about this before, is that VOCA rule. The VOCA rule being relaxed for banks to make investments in more high-risk investment areas, which now opens up. So we get it from both ends of the candle, it kind of feels like, right? Like the VOCA rules relaxed for banks to open up and invest in these hedge funds, private equity funds. The OCC says that banks can custody digital assets. I mean, all of this seems to work in tandem somehow to serve a greater notion, whether it's the banks getting into investing as well through private equity to hold a certain percentage of crypto, right? And then offer that to their clients, and so on and so on and so on. It's so exciting where all of this is headed. And then to know that Brian Brooks has been very, very confident in letting people know, and I do mean confident because he understands this space, he understands the innovation, the tech, and he has been very confident in letting people know that he wants to demystify the statement of, or untie the statement of, there's this little obscure agency called the OCC. I mean, that's like almost a direct quote. He knows what he is doing is going to put the OCC on everyone's map. You're going to forevermore. Listen, before all of this jumped off, I can remember, I don't know, it was maybe 6, 8, maybe a year ago at most, Big Skinny had asked me, hey, do you know who the OCC is? I was like, no, I've never heard of that, And, and he told me it's a regulatory body connected to the Treasury. And I was like, well, I'll have to do some reading on that. But yeah, I mean, until a year ago, maybe, or 8 months ago, I had no idea the OCC even existed, So I think we're all going to know before this is over that federal charter is going to be even more specific in the fall that he's going to release, because he said he's going to speak directly to banks being able to, buy and sell crypto. And that's what excites me now. What does the front end of this look like? If they can custody this, do they get to directly buy and sell and convert stable coins, or is this going to be a third party plug and play in the front of this, this conversion here?
Well, that's actually the most exciting part about this whole thing.
Yeah.
Is that now banks can custody. Now, I have to think about the timing of this, right?
Mm-hmm.
And to get to your point, we saw the first CARES Act include a digital dollar section, okay, with the statement that banks can now have a digital wallet attached to your bank account. And so what does that do? Well, what it does is it creates adoption,
mm-hmm.
mass adoption. If you have 100 million bank accounts across the United States all of a sudden wake up and, people wake up in the morning and they see their balance, in their checking account, and then they see a digital wallet there. And they don't have to remember their 12 keys. They don't have to remember their passphrase. They don't have to do anything with long texts of strings, to send, messages or messages in cryptocurrency back and forth. They can just click a button, send it to anybody they want with some sort of user-friendly account number attached to it at another bank. That means mass adoption on a scale that is just insane to me, because you don't have to even worry about that stuff. If they're going to custody it, they're going to have your keys. You probably have a backup key, so you're going to own it. At least I hope that's the way it's going to go. You still own it, and you can take it off of the bank if you want to, or you can leave it on the bank. But if it's insured, there's really not much risk, right?
Yeah, exactly.
So you have to think about the risk, and you also have to think about adoption. I think for the majority of people, since they're doing business with the bank anyway, it makes a lot of sense, especially those who are not tech savvy, to have their cryptocurrency at the bank. And so the adoption is going to be absolutely massive. And as far as the timing of this is absolutely incredible, because we saw that bill in the first CARES Act. They're coming out with another CARES Act bill. Whether we see a digital dollar in that new and a digital wallet at banks being specified in this new CARES Act or not, I don't know. But I have to believe that they're still working on that, because the first stimulus checks, a lot of those have not even gone into the hands of the people who need it. And some are saying that the checks that they've sent out is like maybe October. Do they really want to take that chance and have that kind of a delay if we get a second round of this health issue in the fall and people still don't have the money from the first one?
Yeah, and I'm one of them. I still don't have my stimulus check. Yeah, I'm absolutely one of them. It's interesting, right? So, but hey, thank goodness we do, right? We push on,
Yeah.
But I do want to bring the conversation, because you talk about a digital dollar and digital wallet that was proposed, which is a very, very interesting thing, and the way that you laid that out really shows where a lot of incentive for adoption is, because if you have the digital wallet that's attached to the bank account, you do feel like I don't have the hurdles that some crypto investor in this space deals with every day like we do. I mean, the addresses, all the confusing things. Do I need what is with my picture in the wallet? And I don't understand.
You need a memo in there? Do you need a ID?
Yeah. Yeah, and the terminology alone is so confusing. It's just it's very it's very difficult. So let's turn attention to the dollar. So the dollar has been going off a cliff lately. Can we talk about that?
Yeah. So the Dixie is just like a waterfall. It's just absolutely incredible, dropping very, very quickly. And in fact, it's down again this morning when I looked at it, and it's at a 2-year low now. I wouldn't be surprised to see it much, much lower going forward. And it has a lot of implications for the general economy in the U.S., but also the economy around the world, because as we know, a lot of the debt around the world is denominated in U.S. dollars.
Yes, absolutely. And another thing, I don't know where I read this, and I was looking for it here, and I don't see it, but that someone had noted that the Fed had printed more money in the last handful of months or whatever than we've seen, and I don't know, it was the last century, or I don't know, it was a couple decades. I'm not sure what it was a lot, right? And I just want to speak to that for a second, because there's larger implications out here about all of that printing, and seeing the waterfall thing happening on the Dixie now with the dollar. What are your thoughts here going forward, seeing a scenario like this? I know before we talked a lot about the 1929, 1933 playbook, and then you reached a point where you're like, I think we're out the window with that. Where are you now?
Well, we're seeing the dollar just drop like a rock. We're seeing the commodity indexes, the USCI and other commodity indexes, forming a base. We're starting to see cryptocurrency starting to form a base higher, as we mentioned. right now, the way I'm looking at it is that the dollar index is really compared to 6 other major currencies. And if the US dollar is dropping against those base currencies, it means that we're printing much more than they are at this point, right? Mm-hmm. And so I do think that the US dollar has a lot further to go to the downside. I think commodities are starting to rise. Cryptocurrency is starting to rise. What does that mean for the economy? Well, I think the deflationary period is probably at an end.
Right.
So when I mentioned that the 1929-1932 playbook is probably off the table, it's because of the statements that the Fed made that they are willing to do anything, and take any action in their tool chest, which is expansive now, and apply it to the U.S. economy. In fact, not only the U.S. economy, but the world economy. And I made a statement in a tweet a few days ago that we're exporting our inflation now. So not only is the U.S. Probably going into an inflationary period, but we're also exporting it to other countries because of all the swap lines that we have with other central banks. So I think we've gone through the deflationary period, which was fairly mild compared to the 1929 to 1932 period. And I think the Fed recognized the fact that we don't want to go into that period because low prices will instead of stimulating consumer demand, will probably suppress it. And so their Wednesday meeting this week, Chairman Powell reemphasized the fact that they were willing to do anything to stimulate the economy. And so they will continue to print, and stop a deflationary scenario like we saw in 1929. And it's not, and so now I think, in fact, we're starting to see a consumer confidence report came out. It was up 5.5% for the month of June. So we're starting to see consumer confidence come back. And the reason for that, of course, is, the money printing and the credit facilities that have been, the Fed has really given to just about everybody, including individual small businesses, large businesses. No matter who you are, you're going to get and interest rates have stayed low. And so it's very easy to go out and start borrowing as long as you have a stable income. And I don't think that's going to end. They're going to continue to kick this can down the road of stimulating the economy, buying up all the U.S. treasuries. And so, not only do they control the short end now, but they also control the yield curve. So the entire curve from the 1 month T-bill all the way up to the 30-year bond, they're controlling the whole curve. And, there's a lot of argument for the fact that that's a bad thing coming, in the future here. That's going to end very, very badly. But right now, since they're doing that, I believe that we're going to go into an inflationary, and it might be a very slow recovery with slow inflation, maybe 0.5%, 1%, 2% a year. But at some point in the future, if you're not in assets and you're still in the US dollar, you're going to be way behind the curve because asset prices are going to take off. And it doesn't matter what asset it is: crypto, real estate, gold, silver, commodities of any kind, because they're going to really start to, I think the inflation scenario is going to start to heat up. And within a few years, we could see 4 or 5%, maybe even more on an annual basis of inflation.
Yeah, and I want to say to everybody right now, is this thing on? Don't go to sleep, because you need to rewind the video and listen to the last 2 minutes of what you just said. I mean, it is an important moment listen, this is as much about survival as it is about trying to invest and make some money in your life and these kinds of things. I mean, what you're saying is so profound to me that if you're in cash, you've already lost, right? And that's the key. And that's really, I mean, I just hope a lot of people really do get that. And if not, back up in this video and keep listening to that until you do get it, right? Because it can be absolutely not, it can more than just impact your life if you really get it, right? So
we have a few weeks ago, and well, actually a couple of months ago, we mentioned the fact that, you know, we're going to go into a deflationary and then a hyperinflation.
yeah,
Well, that deflation scenario has shortened, just like the decline that we saw in March,
right,
in the stock market. It was the sharpest and the shortest decline in the market ever.
wow,
And now we've seen a recovery from that. Stock asset prices, all of the asset prices. If you're in cash, you're going to be losing 4, 5, maybe even 10% a year on that. It's all about purchasing power, right? Why do we invest in the first place?
yeah,
We want to just stay ahead of inflation, so we don't lose our purchasing power. And the only way to do that is really to have some diversification in your assets. Real estate, you know, commodities, wheat, copper, all these different commodities, gold, silver, crypto, all of these commodities are probably going to see a rise. So just so you can maintain your purchasing power, is if you're in cash, you're going to be in trouble.
absolutely. Well said. Yeah. And speaking of cash and being in trouble, I'm going to shift the conversation to, and in fact, while I'm going to pull this up so they can see it. You saw that we went over this before we went live this morning or recorded this morning. But it's the post from XRP Crypto Wolf sharing the G30 meeting and what their thoughts are on that. And I'm going to pull that up now. And while we do that, Dave, if you're able to adjust the little cover you have for the sun just a touch, if you're able, you know what I mean? And I'm going to pull this up while we do that and then go to that screen. So this is the digital currency and stablecoins risk and opportunities and challenges ahead by the G30 Group of 30, published in Washington, D.C., July this month. So this is really interesting. And when I go back to where the page in question is, we all remember, if we've been in this space a while, the Jackson Hole, Wyoming meeting where Mark Carney came out and said a hegemonic currency could be the answer, you know, even a digital asset, but he stopped just short of saying the things we wanted to hear. But in this conversation here that's highlighted about wholesale CBDCs, I want to read to everybody and you what was said here in completion. And coordinating the introduction of global official sector stable coins, which, you know, this is a conversation as well about XRP potentially being a global stable coin. Mark Carney said in 2019 has raised the question of whether a globally coordinated systemic hegemonic currency could dampen the spillover shocks associated with dominance of the U.S. dollar as a reserve currency. A systemic hegemonic currency could, for example, be a stable coin backed by a basket of deposits at different central banks. It is possible that such a stable coin could be valuable for cross-border payments, serving a function similar to that offered in private sector by Ripple, a real-time gross settlement system, currency exchange, and remittance network whose digital currency XRP leapfrogs slow and expensive correspondent banking. I want to now go to you, Dave, and get your thoughts here.
Well, that was definitely a mouthful.
That was something, right?
I mean, he packed a lot into there. What's interesting that he mentioned that it is the U.S. dollar and the potential of a global coordinated hegemonic currency could dampen the spillover shock associated with the dominance of the U.S. dollar. So, as a reserve currency. So, what is he saying there?
Mm-hmm.
Well, the spillover shocks associated with dominance of the U.S. dollar is that global trade, for the most part, has to be denominated in U.S. dollars. And that includes oil, right? So that kind of, I think he's saying that there are shocks to the system that could be that haven't been felt yet, but could be very damaging to the majority of countries, those who do not are not part of the can't purchase the petrodollar in order to and use the petrodollar in order to purchase the oil that they need, and are on a completely different system trying to skirt it. And also the fact that the majority of the debt, the global payments through import and export is all based on the U.S. dollar. And when there is a shortage of U.S. dollars, or there's too much in the system, it does provide a potential shock to the system when those balances are, out of whack. So they aren't really balanced. And so, interestingly enough, he said that in the same section of this paragraph, he creates a scenario of a basket of currencies, including probably the US dollar and all the other major currencies, but then tying it to a stable coin. And he uses XRP as an example.
Mm-hmm.
Now, so is he signaling something here that in some way, shape, or form, that because of the ubiquitous nature of XRP, convertible within seconds to any major US currency across the world, that a stable coin such as this could dampen, so reduce the shocks to the global financial system because of the velocity at which XRP can be converted to almost every currency in the world.
Bingo. Right? I mean, it's like it's massive.
It is massive. Why he picked the XRP? Of course, we know why he picked XRP, but now he's actually coming out.
Yeah.
And comparing. I mean, when he was at Jackson Hole, remember the Jackson Hole event?
Absolutely.
He came out and said, "Hey, you know what? We could replace the U.S. dollar as a world reserve currency."
Yeah, that's an ally on our soil saying that. You know what I mean?
But he never mentioned XRP.
Never.
At that point. But now he is. Why? Well, his bag is probably full.
Yeah. We just found an XRP holder. You know what I mean? Look, I read that comment and I was like, damn, I know Mark Carney's been at the Bank of England, but did he start a YouTube channel too? Because I know I've been accused of hype. Is anybody going to accuse Mark Carney of hype? Because, I mean, that is hypey right there. I mean, I love it. Now, here's what catches.
Let me just say this. I don't know Mark personally, but no offense, Mark, if you're not a bag holder, but I got to believe that, hey, you got maybe one. You
got at least one or two in the bag, right? Yeah. So the thing that really catches me about this, I mean, aside from him literally saying Ripple XRP, they're not holding back the language. Let's go back to the talking about a stable coin backed by a basket of deposits at different central banks. This is an agreement he's talking about here, that we are doing something very similar to what the SDR does, right? But, we're backing these deposits at a central bank. Look, I did a video a while ago. Of course, I've done a lot of videos about this, but about collateralizing the ledger to get a price set or a floor of a certain price. This is exactly what that would do for an asset like XRP. If you put a certain amount of collateral of these different assets around the world, I don't know, like the major currencies that are in the SDR basket, and they're all collateralized and held as a reserve, they might allow themselves to hold a smaller portion of dormant capital in the Nostro Vostros by collateralizing together this one asset, right? That frees up an enormous amount of capital, in the traditional sense of the Nostro Vostros. Can you talk about that for a minute?
Well, I think you just nailed it right there. I mean, what you just said is incredibly important. If you really want to understand where XRP is probably going to go, I mean, just total speculation on our part, because we have no hard evidence of the fact that XRP could be held at central banks in order to facilitate cross-border payments or provide, global payments and possibly be part of a world reserve currency. But I think we're moving in that direction.
Yeah.
And it makes a lot of sense that XRP would be the crypto of choice, I guess, for the central banks to utilize and collateralize these accounts. As far as how it would look to a layman like ourselves, okay, we would see maybe the IMF, who this year, right, is going to review the basket of the SDR.
Come on in.
And so we've got this review going on. Now that the OCC has come out and said, hey, banks can custody crypto, doesn't it make a lot of sense that the SDR restructuring here or review could come out with a statement saying, hey, look, it's not just the currencies, sovereign currencies that we're going to add to the SDR, but we might include a few cryptocurrencies as well, because of the fact that they are global, that they are every cryptocurrency is pretty much global at this point. And a lot of countries have come out with regulations stating that they're legal. Okay, there's still some FATF kind of, haggling back and forth about which ones are legal and which ones aren't legal, and which ones can be traded, which ones can't be traded. But for the majority of the cryptocurrencies, at least the top cryptocurrencies, including XRP, that's not really an issue anymore, especially with the OCC and other governments coming out and legalizing cryptocurrency trades. So they could say, hey, look, we're going to add Bitcoin to the SDR. We're going to add XRP to the SDR. We're going to add Ethereum to the SDR. So they could take like the top 3 currencies and just say, hey, this is a way for us in the IMF to introduce cryptocurrencies, which are globally traded anyway, into the SDR.
Yeah, it's certainly possible, and I know that we're speculating, but it is the year that they reevaluate the basket. Maybe it happens, maybe it doesn't. But this is Mark Carney. This is not a podcaster or a YouTuber. This is Mark Carney from the Bank of England, specifically citing Ripple XRP to play that role, and they call it a stable coin. And that's where it comes into the question for me, where I've been covering lately on the channel about a global stable coin, which until I started covering this, I think it was last April when the international, I don't know if it was the FSB or G20, one of those international organization bodies came out with global stable coin. How do we manage it? How do we supervise it? All this. And it was like, wait a minute, I never heard those two words strung together before that document came out. And I found it to be so profound because the definition of it was just slightly different than a stable coin definition. And I found it interesting because they could literally, look, it's a decentralized asset. They need to make it decentralized. They can't take it over because it's a decentralized asset, XRP. But if they all are in agreement to bring a certain amount of capital from their currencies onto the ledger, we have an instant price that is guaranteed to not go down below a certain price. And I've always said that if they're going to convince the central banks and the large entities that have massive global payments or even, the derivatives markets and back-end settlement and these things that need it, they need something that is more reliable in price than even the most reliable asset that's considered money today, which is gold itself. Right? So they have to have something that's actually so reliable that Bank A and Bank B and Government A and Government B that normally would rather send each other, hate mail than actually deal with each other in any kind of trade situation. And you're going to convince all of them to use this asset they have to be able to guarantee the reliability of that price be certain thing. And I think this is the way you do it, by providing a collateralized floor, and then the asset can still take on liquidity, right, from market makers and market participants and things of that nature, and it can still remain an open, free growing asset, right? It could still gain in value, but it'll give me that floor if I'm a bank and I'm doing billions, if not trillions a day in settlement. Your thoughts, Dave?
Well, yeah, so there's a couple different things that we need to pull apart and kind of examine if we think that that's going to be the scenario. Number one is we have statements from David Schwartz and the Ripple team about the fact that we need a higher value on XRP in order to facilitate larger payments, because it doesn't really make any sense to buy a house with XRP when it's at 24 cents.
Exactly.
So we need a higher value to go to $120, $200 to $500 or whatever. It needs to be, it does need to have some sort of floor to it at a higher level than certainly where it is right now. Again, pure speculation on our part, but it does, if it's going to facilitate and if it's going to serve that purpose, it's going to be at definitely at a higher price. Now, here's how it could happen. You have whatever currencies that it's going to be collateralized with. Take that basket of currencies, and let's say there's, if there's 100 billion, okay, in however they value that. I mean, it could be in US dollars, it could be in SDR units, it could be, I don't know how they're going to value that, right? Mm-hmm. And they say, okay, if we're going to start, we're going to have an index. We're going to start at an index level. And this is how in the stock market world, in what I do is, if I wanted to index a stock or index a basket of stocks, I create a starting point with an index that starts at 100. And then whatever happens after that, the price fluctuations of that basket will continue to fluctuate up and down. And then I can measure it using that benchmark of 100 as the starting point for the index to see the value either increase or decrease over time, right? I would imagine something like that happening to the index that they're going to use for the XRP basket in the SDR, or whatever stable coin they want to use, and whatever basket currencies that are going to be in that basket. So they have a starting point of 100 on the index, and then track that over time. It could go below that or it could go above that. But if you're pegging the index, the only thing that's going to create the float is whether or not individual countries are going to continue to print. So if they're continuing to print, and so you've got a greater supply. It's all supply and demand. This is economics 101, supply and demand. If you have a stable XRP supply at 100 billion, and you've got a basket of currencies that it's collateralized against that continue to print, you've got more supply against a stable supply. That index starting at 100 will probably continue to go higher. And so maybe that index, if it's set at 100, will go to 101, 102, 105, maybe go back down to 103. But because it is measured against a wide basket of major currencies, the fluctuations are not going to be as great, but it's probably going to see a very steady increase and rise over time.
Wow, well said.
And I'm not saying that XRP will be pegged to $100.
No.
Dollars. It could be and that's just the index number. Right. It could be pegged at any dollar amount.
Right. And one would think, with the trouble that the dollar's in, they would need to come together. See, what's really compelling about this conversation is that the dollar is in a waterfall, right? It's falling currently right now like a manhole cover from the sky in value, right?
Yeah.
Well,
this is very
sharply.
very unusual. It's not usual. It has dropped. It's the sharpest drop. It almost looks like the way the stock market dropped if you want to do a comparison on March 12th with that low. From that early March to March 12th or March 15th when the low hit, it looks very much like that.
Wow. Yeah, that's scary. And, to couple that point with, the narrative, which I've never subscribed to, but the narrative is that the U.S. is behind. My thought is that they're doing a lot behind the scenes to be ready, and there will be a public and private relationship which they can plug into to immediately get up to speed.
I agree 100%.
I really do. But with that understanding that they are not ready until they, really take advantage of that private relationship, with the public sector there, and the current fall of the dollar, it really puts us in a position where, hey, you're going to have this talk, whether you take this extreme position of having something like this introduced or not. Somebody's going to have this talk. I mean, this is not a sustainable scenario.
Right. Absolutely. So, I think there is a lot going on behind the scenes that we don't know.
Yeah.
It's evident from some of the reveals that we've had, including the statement from Brian Brooks at the OCC.
Yes.
There's a lot more to this than we know.
Yeah.
The fact that they included that digital dollar in the first CARES Act statement is very revealing. I think that the U.S., because it is the world reserve currency, has to do this in a very measured way.
Yeah.
And any mistake, any misstep could jeopardize the U.S. The world reserve currency status. Now, whether they share that world reserve currency status with the SDR as a potential backstop is something that I've thought about because of exactly what Carney is saying in that piece from Crypto Wolf. It could provide, the U.S. reserve currency, U.S. dollar, can include shocks to the system in which they want to avoid as much as possible.
Yeah, I mean, it really is. So as a reminder for people, three things make up a currency. It's a unit of account, store of value, and a medium of exchange. And that's where let's talk about this, because it is the year that the SDR is reviewed, the basket of currencies for the SDR by the IMF. And, it's really, I just sitting here, sometimes it washes over me, just how profound it really is what we're discussing.
Yeah. And incredible implications. Now, if I had to put let's say somebody try to, pin me down and just try to put a percentage probability. I always think in terms of probabilities, especially when it comes to markets and events.
Nice.
The probability of the IMF adding cryptocurrencies to its SDR, what would that be? What would it look like? And I'm not a good guesser. Right. I really am not.
Yeah. No, I hear you.
I like to look at facts, events, and then attach to that a probability of some sort to the potential for an event happening based on its previous history. So if we look at the fact that they are reviewing the SDR, we look at the fact that the U.S. looks like it's on board and banks can custody crypto. If we look at the fact that the CARES Act initially had a digital wallet, if we look at the legislation that's been passed around the world, including cryptocurrencies, if we look at the fact that, and I'm not sure it's actually happened, but the Marshall Islands has adopted a cryptocurrency as its national sovereign currency, hasn't it?
Yes, it has, yeah.
So if we go back to some of those events, what do they all add up to? Well, I think they add up to the potential of at least a 20% chance that they are going to add a cryptocurrency to the SDR this year.
I would agree. Yeah, no, I agree. It is. There is a chance There is a chance there. And, to complement this probability and this discussion, I just covered that, I think it was yesterday or day before, that the Canadian stable coin that's been launched has also launched another coin, a Canadian USD coin, which is for trade back and forth with the United States. Now, it was mentioned a year before that, courtesy to DJ Peter Vass, who found it and dug it back up again, that the Canadian stablecoin and the BVC or BVIC that's connected to all of this, back end, is connected to the Ripple and Ethereum network. Now, all of this ties back into Mark Carney's comments. All of this ties into exactly everything that you pointed out. And I mean, we don't have the one smoking gun, right? But we're looking at something that appears to be a plan coming into place, is what it looks like.
Absolutely. I think you can't ignore the fact that that Brian Brooks statement, OCC, really was eye-opening in my opinion, because he's talking about adoption, and one of the phrases that he used in there was consumer demand. Mm-hmm. You have to look at the demand for cryptocurrencies as a customer of the currency, as a customer, as somebody who uses the currency. Yeah. And so there's demand there of I think he mentioned 10 million or something, or tens of millions of
something like that. Yeah.
Citizens are using cryptocurrencies.
Yeah.
Interesting how he got that number. I'd like to see the data on that. And I think it had to do with the most recent tax return, in which you check a little box saying, hey, have you done anything with cryptocurrencies this year in the US? And maybe, I think that's it. And then he compares it to the income level of those individuals. And so if he sees a very high income level on the tax returns checking that box that they are now into cryptocurrencies, well, that's demand that they will pay attention to.
Absolutely. And he gave a fantastic interview, and shout out to Aaron Klein from Brookings Institute, who interviewed Brian Brooks either a couple days ago and it is a remarkable interview. He goes even deeper into this conversation about, what he's going to do, what he intends to do. He's not worried about anything when it comes to introducing this stuff. He feels like he has, and I believe he does. I mean, this Brian Brooks has he has such an amazing insight on what needs to happen with the innovation in space, and he can articulate it very clearly about what needs to happen. It is not a complicated issue to him at all. And one of the things he said about being able to open up this clarification for banks is that banks over the years have been losing and bleeding out payments and things of that nature to all of these other entities, even outside of the crypto space, to payment providers like PayPal, Venmos of the world, and all these different platforms that exist, right? And then he talked about, and then there's crypto, right? And then what it's able to offer that banks can't. So now that banks can do this, he remarked that he saw a level playing field as bringing it all back into the framework, instead of all of these non-financial banks and payment companies and virtual asset providers all being scattered and not really having this clarity. But let's get them into a place where all of them actually come back into the framework, because now it's a level playing field, because you're inside on the field in the playing lines of that regulatory framework. I just think that's such an important point to bring home, because right now they are bleeding the banks out. They're losing a lot of services that they would normally get to their customers, that nowadays I could send you money, Dave. I don't need to talk to the bank.
Yeah, absolutely. And the banks are really under pressure. I mean, they are losing a tremendous amount of money. Interest rates are, yesterday we heard, or Wednesday we heard that the Federal Open Market Committee, the FOMC, stated they're going to keep rates at 0 to 0.25% on the short term. Banks can't make money doing that. they have to start opening themselves up to new opportunities. And this, in the cryptocurrency market, in the custodying and the selling and the storing and all of the other services that they could provide in this market, is a potential revenue generator for them. Otherwise, a lot of them are going to be in a great deal of trouble. So, I got to believe that behind the scenes, all of that work to, not only create that section in the CARES Act, the first CARES Act, to create digital wallets at banks, and now this OCC statement, is got to be in some way supporting the traditional banking system to provide, to create those, within the regulatory framework, additional fees and services that they can provide to their customers. Yeah. Because that's what they want. The customers want this.
They do.
As evidenced by that letter.
It's exactly right, and we're about to get it in a very big way. So I think we could final thought this thing. You got anything else you want to touch on, or you want to do a final thought?
Well, before we do that, we have a question from our friend.
Oh, yes. Throw it out there, go ahead.
Well, you heard the question from him, so why don't you?
Yes. Oh, yeah. So digital asset investor asked, and he asked this question in a panel last night, and I'm telling you, I put it in my video this morning. It was fantastic. And he asked a question, and really, especially now with the dollar falling the way it is, banks allowed to offer crypto. Let's take that moment tomorrow. Let's say tomorrow morning, the regular consumer can come in and get this crypto or custody my crypto at the bank, and there's a digital dollar. What's the incentive, Dave, for me to hold a digital dollar? Why would I want it?
Yeah, so the only incentive really is to have the liquidity to pay your bills.
Yeah.
And so that's about the only reason. Now, remember that cryptocurrencies, if you do have cryptocurrencies in a wallet, it's a speculative investment.
Yeah.
Just like stocks, commodities, real estate, or anything else that you're investing in, you're going to have fluctuations in value, right?
Yeah.
So the only reason you would want to have a digital dollar in your wallet is to have enough liquidity to pay your everyday bills, water, gas, heat, mortgage, whatever you have to pay, right? So that's the only reason. There is no other reason to have it. In fact, if we continue to see a decline in the U.S. dollar, you'd only want to have as much in there as you could possibly, that you need for the next day, 2 week, whatever it is, in order to satisfy those obligations. Otherwise, there's no real reason to have it in there, losing value almost on a daily basis.
I think that's such an important point for everybody to get today. I know we even touched on it to a degree earlier in the show, and it's such an important point that cash is in trouble. The U.S. dollar is in trouble, right? So, and the people need to be aware of that. And shout out to Digital Asset Investor and Big Skinny for the stuff we talked about today. And I know that he is a huge, I bounce a lot of stuff off Big Skinny, you know what I mean, throughout the week. And we have some really great conversations. One of these days, we're going to get like a phone conversation and just record that. You know what I mean? And then just like, because some of that is just some of the best, it just is some of the best back and forth on speculation and off the fundamentals, right? So, all right, so let's final thought this thing, Dave. I mean, what are you thinking about this moment we're in? You called the bull market. I want to get back to that. You called the bull market. Talk to me. Where's crypto going, man?
Yeah, so I think we saw the capitulation. We've been in a downtrend now for about 3.5 years. We're gonna, I was early in September of 2017 when I started investing in XRP. I see a lot of similarities, although I didn't follow the market that closely back then. Very small investment on my part at that point, but the last 3.5 years have been a really, really incredible opportunity to accumulate. And I think we're going to see now. I've been really, really focused on the fact that institutions are starting to come into this market, and there is evidence that institutional investors are starting to play a role in the cryptocurrency market. They're slowly getting their feet wet, trying to get into this market, and I see it in the price action. Now, we may still have a retail speculative run like we had in 2017. That's not off the table. But I do see that if there is institutional interest in this, they are not going to let that happen. They are going to say, hey, look, we're up 3% today. We're going to pull it back a little bit. And we're up 4% tomorrow. We're going to pull it back a little bit. And so it's going to be more of a stair-step method up. And I kind of actually hope that that's the case, because if we go into another speculative market like 2017, we're up 5,000% in a couple of weeks, we're going to see another 90% decline. So I'd like to see the market mature. And that means that we're going to have a nice run. Just like if you look at Amazon stock from like the bottom of 2001, 2002, after the dot-com bubble, you can see a nice steady run for many, many years after that. Yeah, we're still going to see, hey, retail FOMO come in and we're going to be up 20, 30% maybe in a single day. So it may surprise a lot of people that we're not going to get that huge thousands of percent in a day. But I would say over the next, 12 months to 18 months to 2 years, we could be up still thousands of percent. It's just not going to happen in a couple weeks.
Yeah, I completely agree, man. It's very exciting. And I would say the same thing. I think with the announcement of the banks getting into this game into a much deeper way, and understanding that means you're going to see the institutional money, the hedge funds, and all of these massive players, they're going to get first swing of the bat, right? They're going to get first swing in the bat, and then you may see them take big, positions themselves, but then turn around and offer maybe a 1 to 3% allocation to clients in portfolios for crypto, and that's a massive start forward, right?
Yeah. And they know how not to drive the price up against themselves.
Exactly.
And they have been and so part of my call on June 29th was the fact that I recognized the footprints of smart money. That smart money coming into the market, not pushing themselves up, but accumulating at every single low every time it dipped. And to me, I just based on a trained eye and watching the market for tens of thousands of hours over the last 40 years, I see the footprints of smart money in the cryptocurrency market right now, and they've been accumulating the entire time.
Wow. Well said. I love that. I absolutely love it. Dave, thank you so much for being here. And obviously a shout out to Jay Hyatt, who we miss every time he's not with us.
Shout out to Jay Hyatt 139. Text him quite a bit, almost every day. We have some good back and forth. And shout out to my good friend Dan at Tradingology.
Yes.
If you guys are interested in trading, he is crushing it over there. Absolutely crushing it. Check him out.
Definitely check it out, guys, and check out all those links that we have, because we do have a link, I believe, to Dan and Tradingology, I believe, in the description box. So make sure, and if not, I want to get one for him in there. So it is definitely an eye opener. I learned a lot the day I got to stop in and visit, and I mean, you guys are the real deal Holyfield in there. It is absolutely an amazing experience to participate in that, no doubt. All right, guys, have a great weekend. Dave, have a wonderful weekend. So good to see you. Yep, absolutely. And everybody keep an eye out. We got a course coming too, educational crypto course. Friends and family, people that need to get in, kind of hip it up or round the edges to what you know in the space. This course is going to be the thing for you, no doubt. All right, Dave, thank you, buddy.
All right, take care, guys.
All right, take care, man.